Hey guys, DJ from PTA here. Going over the month of December 2022, just to kind of give you a good gist, forward and back on the previous video of me taking this month off, really just getting a lot of the new traders on the desk acclimated with the trades and everything, getting adjusted to the system and doing tutorials and stuff like that. So just wanted to kind of reach back and provide some more information on the YouTube channel. Again, guys, make sure you click and like and subscribe, and make sure you hit that notification button so you don't miss any of these videos when they do come out and be released. So I'm going to go over 3 for the month of December, which was Phvs. It's the first one we're going to go over. The next one is Slno, and then Kala. So overall, the market had its plays. There were a few here in December, nothing really significant. As a group, we ended the year positive, positive P&L. My account was actually positive for the year. Much of the trading community facilitated a positive P&L. We had a few of our traders that ended the year kind of bad, but I mean, it's a learning experience. But overall, collectively, our investors within the organization are very pleased with this year, especially with the bloodbath the market has been. Market overall ended the year, I think, down 20%. So we definitely been in a down market, been in what I would consider a recession. But there's always opportunities on both the long and downside of trading. So moving forward, we're going to talk about Phvs. The day that it ran was on December 8th. So I'm using the on-demand feature on Thinkorswim, and this will be the the product that I'll use continuously on all these videos when I'm doing the actual back testing. Moving forward, I am looking at other different brokerage houses such as TradeStation, Interactive Brokers. So we're looking at some other options as well, especially with our new addition to our algorithm trading. We're looking to do some more coding on that and may use other platforms as well. But I'll do a video on that if we do a switch of any sort. But right now, we're focusing on Thinkorswim. Phvs. This particular stock had a pretty decent move. This is a former runner, so if you follow us on Twitter, if you are in our Discord, or better yet, if you are a part of the team here at PTA and you actually are a member on the site, you can go back and look at the data on this. You also can look at the previous trades. So many of the stocks you will see multiple times because they become multiple runners. So Phvs was one of those stocks that, when you see it jump up on the radar, you're kind of excited about it just because you know that it ran before. So looking at this daily chart on here, you can see that back on June 17th, this stock ran, had an opening price of $21.50, went up as high as $27.50 before it pulled back. So ultimately, that was the day that it ran. And then this day here, December 8th, we had an open price of $4.19, went to $11.94, but closed out at around $11.46. So it was a good day, held many gains. But as you can see, you're probably going to look at a pullback of some sort because that's what it typically do after a big run. So kind of zoom this in, and what I always do is like to draw my indicators, my support and resistance lines from the higher time frame to give you a gist of what's going on. So first one I would have drew was probably about right here at the top, about 1485. We'll just call that 1485. Our next one would have been probably about right here, right where you see that it rejected here. This is a rejection candle, and then you had this big drop off. So I'm gonna call that we'll just call that 750 for easy numbers. So that's about right there. Another one will probably be about right here. This one here being about 940 on the nose. We had a rejection and a pull down. So I'm always looking for an area where it keeps rejecting, and pull down, or have some type of support with a push down. And then here we go again with another little key area about right here. Now this area here is again area where it pulled down, pulled away from. You can also look at this area here as support right here around 458. So we're gonna call that 460 for the sake of easy numbers. And then 565, I'm probably gonna push that out to let's just call it 560. So we got some areas 460, 560. And then the reason being is I'm looking at the body of the candle. So with support, I look at a rejection, wick candles. As resistance, I look at wick candles, as well as any area where there may be a push or some type of volume that stepped in on that candle. All right, so remember that the turquoise candles are indication of support and resistance areas on the daily chart. So let's zoom in. I typically take a first look at the 30-minute and see what the price action was like. When I come into the day, I'm looking at what the stock is doing. The stock was up 6.5 million pre-market, so that means it has some nice amount of volume coming in. So this was pretty much on everybody's radar. So what you're really waiting for is some type of legitimate push and pull once it has identified whatever the key areas were, to take a look at that. So you go back down to the 2 hour. This has some higher lows. Go down to the 1 hour. Had us a pushback, so we had a nice little pullback here. So somewhere right here is probably where the order entry at. But like again, you got to go back from the higher time frames down to the lower time frames to find your position. So I usually take it back down to the 5-minute, and what you can see here is there was a definitive push past pre-market high, which was this price here, about 473. Remember that 460 is a critical area, because that's based off of the pre-market, daily chart support and resistance. So with this being a daily support and resistance and it rejected here in pre-market, you want to see how it's going to come back and react to that area. It broke through. Now the orange line is $5. That is previous month high. So when you got a previous weekly support resistance that came from a higher time frame, and then you're running into a support or resistance area right around, this would be resistance right around $5, which that being a whole number off of the monthly high, you want to play it safe and let it pull back from there. As you can see, it went to 501 and then it went to 5 on the green candle, and then it pulled back. So that was your significant push or push pull that came into play. Now, as you can see here, looking at the chart, you can look and see that it started to draw some type of support here. So you can see that it bounced, came up, bounced, and held. So this area right here, for whatever reason, this is going to be an entry day, so we're going to paint that purple, developed to be some type of support. So where did the support came in? Where we got a bunch of rejection candles there. We'll just say support was 390. Just for the sake of easy numbers. Remember purple. So that's where it rejected, popped back up to 5, and then pulled back, and then couldn't get back down to the area. So some traders loaded in here as it grind. Right here is probably the ideal area. Now why is that? It's because you can see the ascending wedge right here. So as this stock started to ramp up, now let's think about this key area. Now, if you're thinking about this logically, you understand the sentiment of the market. You understand that there's about 6.5 million shares being traded at this point in time. We're probably north of, let's do some math. Yeah, so we're literally north of probably 8 or 9 million shares that's been traded in this area. So we had 6.5. This became a lot. So off of that, you're gonna get some type of squeeze or push. We got some support coming in. And this is what I was talking about, the key factor of confluence. So when people say, what are confluence? Confluence is when you have multiple things happening in the same area at the same time. All right, so what is your areas of confluence? On this particular stock, the areas of confluence was this. And I want to draw this out so you guys can kind of understand. This right here is multiple things happening. So one, you have it breaking over a wedge, which was right here. Two, you have it breaking out of a key area. That key area being here, $5. Three, you have a major support stepping in off of the wedge. Four, you had an increase in volume. In that key area. This is what those things all happening at one time. So you have major support coming off of a monthly high. You had intraday support, which is around 390. You also had a wedge forming, and you had a breakout coming off of that wedge. You're also coming into another key area. Now it could have slammed in this area, but the amount of volume and everything that was going in there, that was a lot going on. So let's talk about that. That 560 area was a key area. So let's take this back off of the daily. You see this 560 area, there wasn't a lot of volume on those days. So that could be easily pushed out. But these are people taking cover in those areas. So let's go back down to the 5 minute for clarification. We hit this area. Now, if you look at this and you look at the timestamp, this was about 12 p.m. Eastern Standard. We went straight into a halt. It was about a 10-minute halt. Why? Well, we just literally cleared out two key areas, 560 and $5. So we slammed straight into this area here, which took it back up to 671. At this point, you're in this key area and it pulled back, opened up and kept going. Now it's ripping back up to another key area, 750. So now you're looking at another key area, and then it ripped, fell back down, supported, or at least tried to. Here go your support, and then it ripped again to another key area, 940. So as you can see, it's always going to break the area, come back, retest, and then continue on if it has legs. This one had legs. So this was the key area to get in. It popped up, went as high as intraday around 1194 before pulling back. So it broke over this area. So one of the key things you want to look at is, okay, where are these key areas? Because the key areas is going to give you an idea of where this stock is going to go. Now, if you take this to an even smaller time frame, it looks even more wicked because the candles is just looking like it's going straight up. And it's not really the case, but that's just how it looks. Here you go, another wedge. So you always get a second momentum pull. Here's your second momentum pull. So if you miss the first one, everybody's waiting for the setup for the second one. Again, breakout wedge off of a key area, key support or resistance area, going into another resistance. That's why it slammed and then pulled back and kept going. This is what you call confluence. When you're looking for multiple things happening at the same time, this is what gives you that edge and get you an understanding what everyone is looking at. Now, some people might have waited for the first rip and say, I'm gonna wait for the next rip. This is where those people came in. The third rip is where people tried to get in. They sucked them up right here, pulled in more shorts, and then they ripped it higher back up to 1230. And then they sold it right here off of support on 940. So it's always looking at those key areas of where things are happening. This was nothing more than a bear trap. This area here, right up under a key area. Everyone's getting confident. It's starting to pull down. It's already pulled down literally over $1. More people add, slam, and then they rip it back up. So the psychology of what they're doing is understanding the flow of where the chart is going. The best place to always get in is during the first rip. Why? Because you're playing it closest to the lowest point of the day, which was here, about 390. So what you do is essentially in this type of trade, is you get in and you risk to a support area. So your risk would have been somewhere around 455. You might even want to trade it down here to 430. It's about a 40 or 50 cent risk. And then now you got this beautiful rip going higher and into a key area. So even if you had got in, let's say at 5 and it ripped, I mean, you literally got a nice move from 5 all the way to, I mean, even if you took it to the first pullback, you still would have got you good, you know, $2 move, 57% gain just from here to here. So that was a nice move. And then from there to there, if you was able to sustain, or maybe you just get out at each pinpoint, it's 87% gain, 49% gain move from the $5. So you would have got it here and here, took some off here, here, and then maybe ride the rest or put a little bit for a buffer into the next day. This is what you're looking at when it comes to confluence and trading. This will help you understand what is actually going on in each trade. Where is the key areas at? Where's everybody sitting, so that you can understand how to place that trade more accurately and more precise. The next trade we're going to go over is SLNO. This one happened December 20th. So let me get that set up for you. So let's take a look at the daily first. So looking at the daily, your actual move was on the 19th actually. So let me back it up a day. Looking at it from the daily chart, you can see there really wasn't no action. It was really just a institutional gap. So your support and resistance is going to be off of the higher time frame. So obviously you see this orange line being previous month. You can see the rejection, and a big rejection there. So this 143 area is very critical. 95 cents, previous week high is irrelevant. At this point, you want to look at other key areas. So it would probably be here. Major resistance, support here. It bounced, came back up. You can even use this as resistance here. At 404, we'll call that $4 just for the sake of easy round numbers. This one here is 212, we'll call that 210. And this is where most of the confusion at. So this is where it gets a little tricky, because you got a lot of major rejections here and here. So that 234, 235 area, and we'll just call it 230. 210 and 230 area is very critical. As you can see, this is right where it hit that area and pulled back before it closed. Wow, that's a lot of resistance in this area. This is a lot of resistance. So ultimately, you have to play it safe in those areas. Now, it looked like we had a little bit of resistance here and a pull down at 175. So how does that look on the bigger scale of things? Let's pull back into the 5-minute or 30-minute, I should say. And you start to see stuff form. So remember, pre-market, we're looking at 2.8 million. One of the things we look at is massive volume. So that lets you know there's many eyes on that stock. Got you a pullback off a previous pre-market high. So that's your highest point of the day, pre-market. Then you had another reach back up there, and then it pulled back again. So I like to take it down to the 2-hour and see my areas. So we still got higher lows, so I'll go back over to the 1-hour, and then we start to see things form right about here off of that candle. So let's go back down to the 5-minute to see what that looks like. So as you get into the trade, as you can see, now your key areas are starting to look, remember, pre-market high. This is the day's high. So now at this point, and this point is where it has set the day high and the day low. Draw your line for support. So you got support here, support there. Remember, previous support was right here, sitting at 110, 111. We got us a high of 157. It pulled back, And at that point, you start to see that things are forming. As it forms, you then can look at the area. Now, again, we got a lot of stuff happening right here. We got support coming off of daily support. So you could have risked, 143 off of 109, which is about a 40-cent risk. You can risk off the daily low if that was what you were comfortable with. I probably would have risked about right here off of that. So 130, 143 entry, about a 10-cent, 13-cent risk right here, and looking for a rip to go higher. Now, key areas where everybody's sitting at right here. Shorts got to cover here because they took it down major here. You got major resistance support at 175. Blew past it, went straight up to the next support was 210, bounced around, shot through 242. And after that, it just really couldn't get over that 230 area. Every time it hit that area, it just rejected. And every time they thought they got it over to close harder, they slammed it. So these were like pure rejections. This was a slam. And this right here, that candle right there is what changed the overall momentum of the stock. That candle there. So when that happened, that pulled the stock down to push it down for the day. So just look at the candles. As you can see, it's just wick, and this wasn't a wick. This actually closed above that key area of 230. As it opened up, they pushed it up higher and then slammed it. This was intentional. So let's look at that on the 1 minute, just so you can get a visual of how aggressive that really was. So as you can see, this is where it rejected at, and they slammed it, which created an overall momentum shift to go lower. So reading the candles is a key factor of you becoming a better trader. Understanding the sentiment of what's going on in the stock is what's going to help you become a better trader. And this is something that we teach in our classes to our new staff, is that a lot of times you just need to sit back and pay attention. Just pay attention to the price action. Pay attention to which way the order flow is going, the level 2, so on and so forth, before placing a trade. So this was a pretty solid trade for those who got in on that area, and those who didn't probably got chopped up, or probably tried to add here, or they tried to get in here because it closed the way it did, but then it went higher. It went higher a bit and then slammed, and that probably trapped a lot of longs in that area. The next stop I'm gonna go over is KALA. So as you can see, this is one I was doing a video lesson on previously with the staff, but this was a 2-day runner. So this is going to be a treat because I'm going to actually break down both days. So on the 28th and 29th, the stock ran. So we had a lot of momentum coming off of that. Now I'm going to go over the 28th first so I can kind of break down each day. So the 28th of December, we hit a low the day before, a couple of days before, but we start having to really draw these lines. So the first thing you want to do is look at where was it rejecting. It rejected there, and then it pushed away here. So that 1110 is a key area. This area right here is critical as well. That's 779, 780. That's previous month high. At that point, I pretty much got a clean direction of where I want to be at when it comes to this. So I'll probably draw a line here just to kind of give you an area right there around 2035, just to kind of give you an idea of what the key areas were, where it was rejected. And this right here probably would have been a key area as well. And you can see it because it supported there, broke down, rejected, broke down, rejected here, rejected there, rejected here, and then it broke down. So that 1690 is probably a really key area as well. Now, looking at the chart, now let's just say you didn't have this candle here, you know what your areas are at. Now, oddly enough, the stock went up to 1748, and then it closed below that. This is where all those shorts was at, but look at all the area of interest that happened, and we had a big pull down here. and then we had some support that stepped in right here. Magically enough, this stock stayed closed above this area of 1110. So if we break this down and go into a 5 minute, and let me go to the higher time frame first, I apologize. You see we got a pullback on the 2 hour, but we had a nice ramp up. So no real significant pullback. We didn't really get a pullback to here off of this hour. So our key area is probably gonna be somewhere right there. You go down here for the 30 minute, still had this range to bust open. So we're probably looking at somewhere here. But your pullback's usually gonna happen on your 15, 30 minute, those type of time frames. So right here is your first gathering of a pullback. As you can see, right there is where things got interesting. Remember, we set our high, we got our low. So once it came back and built up some support right here, which was about, this is your first support, which was about $8. And then you had your second support. Let me just draw the line so it can be clear. So your first support was somewhere right here. We'll call it $8.05. I'll call it $8 just to be, sake of round numbers. It's too close to it, $8. And then we look at the second support about right there, about 8:30. So right there, 8:30, pulled back, started to show some support, got us a little bounce, and then we got a nice quick rip. So I know that many of the traders talked about a 940, 930 entry. So they were getting in right here off of this key area, and then we got this nice rip. We ripped into a hawk right there. Now why is that? Well, let's think about it. The stock just bounced, held 830, and then ripped to 1110, which was a key area of resistance off of the daily. So confluence, again, we have major support here, breaking out of a key area off of a wedge, going into a key area of 1110. If it held at 1110, you're gonna get some type of support or some type of hawk because of the price action. Then it ripped, it bounced, and then it began to hawk again here. Did a hawk, open back up, slammed straight into the 1690 area, wicked out, and then pulled back down and kind of just faded for the day, and then they ripped it back again after hours. So now this is what we call the trap. This was all just a massive trap for the shorts. This whole area was just a massive trap for the shorts. So they pulled it down for the whole day because it's massively up for the day. It's up on news, 2.1 million worth of volume. There's a lot of people looking at it. There's a lot of volume handling the stock throughout the day. So for that to be said, you had 51 million worth of volume that day. The previous day was only 1.4. The previous week was 137,000. So obviously somebody somewhere knows something. So if you're following the volume, it's like following the money. So if you're following the volume, it's like following the money, then that's where that price action is going to be. You just have to wait for the proper setup. Now, I'm going to remove that drawing. I'm going to remove the wedge, and I'm going to leave. Let's see something. Which just allows you to be more confident in your trading, put together a nice trade from top to bottom, and understanding your exits and entries and exits. So the biggest key thing I wanted you guys to take from this video is understanding support and resistance, key areas, and how those key areas create confluence so that you can make a confident trade. So as I stated in the other previous video, making sure you know where your entry, making sure you respect your stop loss, as well as having an exit, which is typically or would like to be around support or some type of resistance. So if you're getting in a trade, typically you want to get out at support or some defined number. Your exit should be a target price. In this instance, it was 1690 or 2035, and let the trade go from there. Once you understand these key areas, it'll bring confidence in your trading and allow you to create some excellent opportunities for yourself. And then over time, and it's the key aspect, over time you'll be able to add more shares, more size, and then make the big bucks that you want to make. All right, guys, make sure you click that like button. Make sure you hit that subscribe button. Don't forget to hit the notification bell so you don't miss any of our videos. And as I tell old traders and new, stay studying and stay focused.